Hey traders, hopefully you had a fantastic weekend and you're having a good start to your Monday. We're going to be going over the global macro update like always in this video, looking over equities, metals, bonds, commodities, all that good stuff. And we always like to start off our day or our global macro update with the S&P 500, which is a really good indicator of risk on or risk off sentiment. So let's dive into the daily chart within this index here. So let's get our snip and then discuss what we've been seeing on the daily chart and then zooming right into the smaller time frames. So let's get our snip, take a picture, and then discuss what we currently see. So we did have this nice descending zone creating a strong level of resistance, and then this previous resistance turned to a nice new level of support. So there was a squeeze within the structure of the S&P 500 where there was a series of lower highs and higher lows contracting the price, contracting the volatility closer and closer together. What did we see within the recent price action is what we're going to talk about next, which is very, very important, but we wanted to discuss the larger time frame trend lines, both descending and ascending, before we get into the more recent kind of couple weeks that we've been seeing here. So within late to mid-July, we saw this first consolidation. This was where there was a lot of chop between resistance and support, not really being able to break out of its range. Also, we did have a key level of resistance right here, as well as this previous resistance turned to a new level of support. So within this range, there was a lot of pressure, both from the sell side and from the buy side. And we were expecting the continuation to move to the upside with the momentum, and then we wanted to see the price break out of this key level of resistance at around 3,200, not only because of the consolidation right here, but also the series of lower highs. And we see it's respected very, very well within this zone all around here through the descending resistance zone. So from that zone, we got to move to the upside. This bullish daily candle right there was a strong indication that buyers are now taking control of the market. They have more confidence and they are going to try to continue the momentum and the overall trajectory for the S&P 500 to the upside. So this was an extremely important bullish candle to close. We see 2 days prior to that daily candle, we saw a huge rejection from this bearish candle where we saw the buyers initially push the price up to this previous high, and the sellers pushed it right back down actually below the open of the candle. So that was a pretty bearish price action candle that got me a little bit worried for the risk on exposure, but this previous strong level of resistance was able to hold it for a strong level of support. And then once we broke out of that range, we're now continuing the momentum to the upside. We see this previous resistance looking back at the prior price action. It's also a very significant level as well, and it does look like we are breaking above this zone. So the risk on sentiment does look like it's going to continue to the upside for this upcoming week. We will now go into the smaller time frames within this zone, but just in simple structural discussion, previous resistance, new level of support, previous resistance, potential new level of support, really validating and respecting our horizontal levels of sensitivity very, very well. So right now, the current level of support is around 3,200, which is the previous resistance, and the current resistance right here is around 3,240, 3,235, and it looks like we are breaking above the range, but I wouldn't be surprised if we get a validation of this previous strong level of resistance as a new level of support before moving towards the upside. Quick question from Nick. What software is this? This is called TradingView. It is a free charting software that you can pay for to get additional benefits, but it is absolutely free to use. I highly recommend it. This charting software is by far the best charting software that I've ever come across in my years of trading. So I highly recommend it. All right. How's it going, Hyper? Got a nice wave. Now we're going to go on to the smaller time frames. Let's look at the 4-hour chart here. The fact that we broke and are holding above this zone is very significant. On the 1 hour, we've already held this zone above this previous resistance. And if we really zoom back, we can see strong level of support strong level of support again. It's going to be a very significant level of resistance that the price needs to pass in order to continue its momentum upwards, and it looks like that's exactly what we're seeing. We're seeing a strong break. We don't see a candle closure on a long-term time frame like the 4-hour and above in my view, but we got around an hour and 39 minutes until this candle closure is complete. If it closes above this zone, I'm going to call it a breakout, and the rest of this week will be risk on sentiment trades only, where I'm looking for exposure for risk on trades, instruments, and whatever the case, whatever you're trading, CDX futures, I'm going to be looking for bullish opportunities to continue the momentum that we've been in since around late April, May. Alrighty, so that's going to be the overview of the S&P 500. Looks really solid. We may get a retest, but I do think the momentum is going to continue to the upside. Not going to be trading it, but it's a really good overview of the sentiment within the global markets. So the NASDAQ is also something to really look at, because this is the leading index for the States, as well as I believe globally. There hasn't really been an index that has rebounded better than the NASDAQ that I know of in the equities market. So when we jump into the NASDAQ, we see strong bullish pressure re-emerging into the market. We see that there was that sell-off right here. We were able to hold this previous level of resistance where we see anchor point, second touch, third validation, hold as a nice level of support, and then it does look like we just had a blow off top, respected the previous resistance as a new level of support. So then we got resistance, resistance, support, and confluence with this previous support, which is adding additional demand to that key zone, and then it looks like the buyers were able to hold this zone, and then we're going to make a move towards the upside. This is the previous all-time high at around 11,000, and it's definitely looking like it's going to test that zone and possibly even create a higher high. So the NASDAQ is looking really bullish for the start of the week. We broke this previous resistance right here, and we could hold for a new level of support, but we do see higher lows coming in, a squeeze, a breakout from that squeeze to the upside, making a bullish impulse push. So the overall momentum on the NASDAQ in line with the S&P is to the upside. So the overall risk sentiment is going to be a risk on sentiment for this upcoming week. A little quick look at the Russell 2000 here. We do see that previous nice level of resistance right around here turn into a new level of support. Russell 2000 has not been as bullish as, let's say, the S&P or the NASDAQ, but this is representing the small caps, and we do see a little bit of a bump up where the previous structural high is now the structural low on this new zone that we're creating here with a tight little consolidation that could have a little bit of a pop. But overall, bullish sentiment in the equities market, it does look like, in the United States. And then we do see exactly what we're wanting for within the VIX. We see a nice slow fade of the VIX. This is exactly what we're looking for in a risk on sentiment or risk on environment. We don't want to see increasing volatility within the S&P. We want to see decreasing volatility. We want to see these slow, nice moving uptrends where you're getting higher highs and higher lows, breaking resistances, holding supports, not getting any major kind of out of the blue major market corrections. These are the type of situations that you really want to capitalize on for a risk on sentiment. So, looking phenomenal right now, and it is in line with the overall thesis and structure that we're creating for the global risk tolerance or global risk sentiment. So that's going to be the U.S. equities market. We're now going to jump into the global equity markets. Going to be looking at the Japanese stock market, which is holding previous resistance as a new level of support right there, which is looking good. We see the Australian stock market did create a, not really, it's just holding the key level of resistance right around here, but it is creating higher lows. So we're seeing a nice ascending triangle setup, squeezing the price against the key structural level of resistance, where we're seeing higher lows with buy pressure picking up the price faster and faster each time. So it's looking pretty bullish for the ASX, which is in line with the other equities or other indexes that we are looking at. The FTSE 100 or the UK 100 index, not looking phenomenal. We do see this previous resistance holding pretty well here around 63.15. But this has been the weakest index, or one of the weaker indexes out of the global and US indexes that we are taking a look at on a daily basis. So not too big of a surprise that the relatively strong indexes like the Japanese index and the DAX, which is the German index, is breaking previous resistances and holding them as new levels of support. And this is the DAX right here. Previous resistance back in mid and early June has been broken. Not many indexes have actually done this. The Japanese stock market index has not, Australia has not, UK has not, but the DAX, the S&P, the NASDAQ has. So these are the relatively strong indexes that we can see kind of create the sentiment and drive the buyers and drive the market forward, creating an opportunity for risk on trades. So it's looking pretty good overall within the global markets for sure for our risk on sentiment. So that's going to be the global equities. We're now going to jump into some of the US government bonds, which hasn't really done anything. 5-year yields is really just consolidating, making a bit of a lower low, but still holding on. Not something that is worth discussing about right now, excuse me. And then let's jump into the US dollar index, which is the strength of the US dollar. So we do see a nice descending channel formation on the US dollar. So we're looking for and forecasting additional weakness in the US dollar. We do see that we're really right at this key level of the low that we hit back in June 10th. And it's kind of resembling an inverse chart of the S&P 500. Whereas if we're looking at the S&P 500, we're breaking the high back in early June. Whereas the DXY, we're breaking the low of around mid to early June, right? So there's definitely a negative correlation here. I hope you understand that between the S&P and the US dollar. So with the S&P breaking to the upside, looking really strong, I do expect the dollar to weaken further from this point. Like we said, we've been holding a descending channel with a series of lower lows and lower highs. And we do see that next lower low breaching and breaking below this previous low. So it does look like the momentum is just going to further continue to the downside. And that is how I'm going to be approaching the market for this upcoming week, is I'm looking for risk off currencies like the US dollar, like the Japanese yen, to be weakening and to continue their weakness, whereas the relatively strong risk on currencies like AUD or GBP recently are good opportunities for the long side, because they have proven to not only be relatively strong compared to the basket of risk on currencies, but this is also a fundamental standpoint where we see global investors look for more risk, I guess, higher ROI opportunities, because their risk appetite is increasing. There's hope, there's optimism in the air, and that's allowing them to take on a little bit more risk to get more of a reward. So right now, it does look pretty strong for risk on trades in my personal view, and I expect the US dollar to make further moves to the downside, weakening its value compared to the other currencies within the FX markets. Now we're going to jump into gold and silver. So yeah, not much to say on silver. It's just been on an absolute roar. I did take a decent amount of my profits here. I do have some left to go, but man, oh man, is it on an absolute roar. We're at $20 right now. We did call the opportunity to look at silver when it was $18. So we were able to play both this descending wedge and the symmetrical triangle extremely well. I would say it's definitely a little late to be entering for swing trades at this point, because the move has already occurred, and this is just kind of that blow off that we were expecting. And right now, if you haven't been in silver or are not in silver, I would personally either look at gold, because gold is looking really solid, or just wait for another continuation pattern, because right now I would say that silver is a little late to the game if you are looking at silver, but gold is going to be something to be looking at. So we see AXU USD, nice horizontal level of resistance. We just broke and retested this very strong level from a previous resistance to a nice new level of support with lots of buy pressure coming into the market. So in my personal view, yes, I would rather invest and trade silver to the upside than gold, just because the gold and silver ratio is so bearish. But if you have no exposure to any metals, I would say right now, gold may be the better entry because you're able to manage your risk a lot more. So what do I mean by this? When we see a possible entry, we always have to understand where we may get out of the trade. And in gold, I would say if you're looking to trade and enter right here with the validation of this new level of support, you could put a stop entry at the recent high, you could put a stop entry above this wick, whatever it is. You could put a limit order to try to get a better entry. Whatever your entry is, you can use a market order, although I do not suggest it. Whatever your entry is, you're looking for this support zone to hold. So where would I put my stop loss? You could either put it below here, but I would say the safe bet would be to go below here, and then your entry here, stop loss here, and then you can look for possible take profits with the high, low distance somewhere around there. We don't exactly know, we are just eyeballing it, but that would be the opportunity that we'd be looking for on gold. So it looks pretty awesome. We do have this next major key level at around 1845, 1842, which is a decent amount away. You could be really looking for strong risk reward potential within gold. So silver, like I said, a little bit late. Gold, I think, does have a really good opportunity. We already see silver absolutely exploding, which is a more speculative opportunity in the metals market. So the fact that we're seeing speculators jump into precious metals is giving us definitely an indication that there's more interest, right? We've been in a bearish market for like 6 years with gold, and we finally broke out of it in 2019, late 2019, when we broke 1400, and it really looks like silver is taking the charge now. It was a little bit of a lagger where gold was taking the lead, and silver, after the March liquidation event, was not seeing as much buy volume. It was rebounding at a less aggressive rate compared to gold, but now we really see silver take off, shooting for the stars here, strapped on a rocket, and that's exactly what we want to see. So overall, I'd say gold's a better opportunity right now just because you're able to manage your risk. But if silver does provide a continuation pattern to the upside, I would definitely be looking to add to the silver position for me personally. And then quick look at the gold and silver ratio. Look at that massive sell-off, kind of like we saw here. We're just seeing an absolute move to the upside on silver, which is awesome. If you're not in silver, you should have been in it. And that is something that you can learn more about if you use the Performante Premium subscription service, because we have told people within our group that silver is looking absolutely phenomenal. We can see right here. Let's just look at this. Give me one moment. This is that zone that we were looking at right here. Silver at $18.11. Silver looks more bullish with the symmetrical triangle squeezing the price together. And then we see gold right here. But silver is this main one that we were looking at. And, we were talking about this for a while, waiting for that perfect opportunity. We got it. We struck. And here it is right now. So $18 and let's say 8 cents around it was our entry. And we were able to get a little bit of a drawdown, but put that stop loss to the break even pretty quickly after it broke the 1935 range. And since then, it's just been able to pay us and just really strongly move to the upside with no real hesitation, no real strong pullbacks. And it's been absolutely awesome. So I'd say right now, like I said, silver's a little bit late. If it does provide a further continuation pattern to the upside, like triangles, wedges, channels, that would be a good opportunity that we'd be looking for. But for now, I would say that gold's a much better opportunity. All right, so going to be looking at the WTI Crude Oil at this point, just making sure that this is public. There we go. All right, so let's now look at WTI Crude Oil. I will quickly go on to my Discord. Let's just... Alright, I just need to let people know that I'm live on the Discord. Alright, so now we're going to talk about WTI Crude Oil, going on to the daily chart. So, crude oil has been, in my opinion, weakening, but because the US dollar is weakening as well, crude oil has not dropped. right? So we see this ascending zone, previous support turned to resistance, but it doesn't really look like it's dropping. That's the thing. Like around this zone, right when we started seeing this, we saw a push, pullback, and then a push, but we're not seeing that next impulse push. So in my view, crude oil is really not really doing a whole lot, but it's slowly appreciating because it is paired with the US dollar, and the US dollar is weakening. Looking at DXY, it is forming and creating and respecting a descending channel, which is a bearish, it's a bearish pattern making lower lows and lower highs. So it makes sense that WTI, if it's completely flat, would be appreciating. So not a whole lot of discussion on crude oil. Like we talked about, we're not really seeing a whole lot of movement. This nice ascending support zone is creating a nice level of resistance, where we do see a strong level of resistance on the daily chart as well, with this around $40.70 zone being a key structural zone. So right now, not a lot of movement within crude oil. Not really going to be looking at opportunities just because it's in a contraction of volatility, but it would make sense if WTI crude oil went up, because crude oil is a risk on sentiment. If economic activity is increasing, production, transportation is increasing, economies use more oil. So it does make sense that if the economy is opening, if there's things getting back to what we call normal, this would move up. So a little bit of a contradiction because gold and silver is moving up as well, but that would be, in my opinion, a little bit more of the monetary uncertainty due to the proliferation of currency, or printing of a lot of currency, which is not just what the Fed's doing, but what a lot of central banks are doing as well. So not a whole lot of discussion on crude oil. Not really forming anything that I would call a nice structure. It's just really tightly consolidating. And I do think the kind of only reason why it's slowly crawlingly moving up is because the US dollar is decreasing in value quite substantially. All right, so that's going to be the WTI crude oil. So that's all the commodities done and done. Man, would I move my silver, hey? Holy crap. All right, so just going to keep that on the SPX chart. And now we're going to be looking at the BTC, so Bitcoin. Let's go here, just seeing if we have any questions. How's it going, Truck Nubs? Good afternoon. Let's look at some questions here soon after. All right, so let's now talk about BTC. So we've been saying this for a while for Bitcoin. It's contracting in volatility. If we're looking at making trades in the crypto market, Bitcoin is not the place to be making trades because we're seeing less and less price movement as it gets deeper into the symmetrical triangle. It's going to be harder and harder for traders to make any significant money within this zone because the price movement is just not that much. You're going to need to leverage so much in order to make any substantial amount of money, and if you high leverage, there's additional costs, there's additional risks. It just doesn't really make sense. So that's what we've been saying about BTC, but we still are constructing an idea of how to make money on this next big opportunity for Bitcoin, because we do see a significant reduction in volatility. We see now we are lower in volatility that we had back in March of 2019. This was right before we had that huge bullish push, breaking the $4,200 level of support and pushing all the way up to 14,000. So we can understand, looking at history, there's a high probability of a massive move after a huge contracting in volatility. We saw it twice already. We've been talking about this before, right? Back in October of 2018, we went from 61 to around 3,200. The next time we had extremely low volatility, we went from 42 to 14K. This time, we're contracting in volatility. We're currently at, let's see the price of Bitcoin, 9,200, let's say. How far are we going to go, right? That is the big question. And also, an equally significant question is which way is it going to go, right? That's going to be a very, very important thing to ask. Discussing the overall correlations between crypto, mainly, or just Bitcoin, in line with the SPX. Let's look at the correlations here just to get a good understanding of where BTC is in correlation within the S&P. So looking at the 180-day correlation chart between Bitcoin and the S&P, we're increasing substantially in the overall positive correlation of the S&P and Bitcoin. We're right around 26% correlated. So the S&P is 100% correlated with the S&P. Bitcoin right now is 26% correlated with the S&P between 180 days. So in a 180 period, that's very, very positively correlated. When we're looking at 90 days, it is getting less correlated with around 0.21, so 21%, which is a little bit less when you're looking at a smaller time frame. And when we're looking at one whole year, we're seeing huge increases in correlation. If you're looking at one whole year, it's not much correlation, but we are seeing an increase. I think the most significant one is 180 days, where we're really at basically the all-time high for correlation with the S&P and Bitcoin. So the fact that the S&P is looking a lot more bullish, in my opinion, gives me a little bit more of an indication that BTC could move to the upside, breaking out of this consolidation. So we have been saying that Bitcoin does look a little bit more weak, and I think that bearish pressure could beat the bullish pressure in this tight consolidation, as well as just looking at the overall weekly chart of this price action. We can see we're nearing some heavy resistance, and there's a lot of room for the higher low to hold. So in terms of the large macro structure, it does look like we could see a little bit of a move of downside. That makes more sense to me, technically speaking. But if we're looking at the global macro space and assuming that Bitcoin's positive correlation indicates that global investors are basketing Bitcoin as the same risk on speculative asset that they would use to make money as, let's say, the S&P, where they're not treating Bitcoin like gold, they're not treating Bitcoin like treasury bills, treasury bonds, risk off instruments. They're treating Bitcoin as a risk on instrument, like the Russell 2000, like the NASDAQ, like the S&P. As long as things are looking to continue in that direction, I think if the S&P is going to continue to move the upside, we could see Bitcoin expand in volatility to the upside. That would be absolutely huge for Bitcoin, because I think that we would see some huge appreciation. Last time we had that was right here. This was that extremely low volatile point, and this was also that extremely low volatile point. We see massive move to the downside, massive move to the upside. And that is why I'm expecting to see a very aggressive move when Bitcoin does start to pick up its momentum. So we will be really paying attention to the overall risk sentiment because of the high positive correlation between Bitcoin and traditional markets, as well as Bitcoin being an extremely pivotal point, technically speaking. So that's going to be my view of BTC. We do see volatility decreasing, but the direction is going to be the big one. And I was leaning at a little bit more of a bearish sentiment for a little while there, but with the S&P breaking to not all-time highs, but new highs since around the summer, it broke the June high. The risk on sentiment is getting stronger and stronger, and the bulls are just extremely resilient in this market. All right, so a little bit of discussion in more of the altcoin market here. Let's get a little bit of coffee, and then we'll jump right into the altcoin discussion, looking at the total 2 as well as BTC Dominance. All right, so let's first look at the total 2, which has not done much. We know that there's heavy sell pressure at like 100 billion, 104 billion. We are creating in a structural step formation. Previous resistance, new support, previous resistance, new support. If it does break to the downside, that's definitely going to be a little bit of hesitation in the altcoin market. We have not seen a lot of our favorite altcoins make the next leg to the upside, where we did have nice symmetrical triangle, ascending triangle formations, and a lot of them did not break out, and we will talk about that a little bit later in the video. But in terms of just a total 2, we do see a little bit of hesitation where we know that there's heavy sell pressure within this key zone. When we do look back on the large time frames, we can see this major level of support, but we do see lower highs getting created. So there's a lot of sell pressure within this area. All right, now we're going to look at BTC Dominance, because this is going to really give us a good indication of how altcoins are doing compared to Bitcoin. So we see not a lot, to be completely honest, a lot of consolidation. And like we said before, if this starts trending to the upside, that means that altcoins are losing market cap. It means that Bitcoin is taking more of the market share, which is a bearish indication in my view, because Bitcoin is going to be the most stable asset in the cryptocurrency market in terms of where you want to keep your capital if there is a bear market. Bitcoin is able to hold its value better than almost every single alt. There are a few outliers that have done better in the bear market compared to Bitcoin, but on average, Bitcoin is going to hold its value at a better rate compared to almost every single alt. So that means if we see Bitcoin increasing its dominance, people are taking capital from alts and funneling it into Bitcoin, which is bearish. Less speculation in the overall market, which is bearish, right? If there are outflows in BTC and inflows into alts where people are taking on more risk, they want a higher reward for the higher amount of risk, they are increasing the speculation, increasing the risk tolerance. That is more bullish because people are all right with the higher risk because they're hopeful, they're optimistic that the market is going to continue upwards toward their intended direction. So right now, we're just in a consolidation right now, but it would make sense if Bitcoin moves to the upside for this chart to then break our current level of support. We see this strong level, initial resistance, turn support, turn support, turn support. So we do see this nice round level of 62, let's say 63%. And if it drops below that zone, I think that we could have a pretty significant move to the downside where altcoins are taking more of the market share, which would be extremely bullish. Yes, you want to be in BTC during that point, but you really want to be looking for relatively strong alts compared to the overall basket of alts that you're looking at. Whatever the case may be, you could look at certain exchanges, whatever favorite alts you have, but relative strength in altcoin markets is very important. All right, also something to note, the Grayscale Bitcoin Trust, ticker GBTC, oh, excuse me. So this chart is Grayscale's chart. It is a way to gain exposure into Bitcoin without actually purchasing Bitcoin. It's an equity. It's a company that you can invest in if you don't want to fiddle with keys, hardware wallets, exchanges, all that stuff. But what I noticed that was a little bit surprising, this looks very similar on the weekly chart. But what I found is the price broke to the downside, breaking the previous support back in mid-May, and then retested for a new level of resistance, which is a lot more bearish than what we're seeing on the Bitcoin chart. So when we look at this, we see a very, very clear structural zone right here that's very, very poorly drawn. So let's get this to make it a little bit more clear. So we see a very well-respected structural zone where we see lots of sell pressure right here, holding the price below a certain zone. But then on the Bitcoin chart, we see a horizontal level of support that's able to hold the price, and it hasn't made a lower low. So the Bitcoin chart is still holding its consolidation, whereas the Grayscale chart has already made a lower low and has validated the lower high, and now we're in a bearish trend in my personal view. So not going to be directly focusing on this solely, but the fact that the equity that institutions use to gain exposure in the cryptocurrency market is losing demand and creating lower low, lower high structures, which is bearish, gives me a little bit of worry for the move to the upside. But we're really mainly just focused on Bitcoin's contracting because Bitcoin is still holding this contraction, this symmetrical triangle, whereas Grayscale has made a lower low, lower high, lower low, and I think the momentum could turn to the downside here, but that's why we're looking at Bitcoin. But this is a little bit surprising, and I like to keep it on here just because maybe this could be an indication that money is not interested in flowing into Bitcoin, and this could be like a precursor or a potential kind of front runner of the Bitcoin price action potentially. And we can see this on the weekly. We see when we're looking at Bitcoin, we see a very, very similar type of structure, key level of resistance, large triangle, and then we see a nice little support here, creating a nice little squeeze within this major level of resistance and a horizontal level of support or ascending level of support. And then within BTC, we see that right here, key level of resistance, horizontal level of support or ascending level of support, where we're still squeezing in, whereas GBTC Grayscale has moved to the downside, broken this structural low, and has validated this lower high. So we're already at this point, which is a lot more bearish than what we currently see on Bitcoin. So something to note. Not going to be the only indicator I look at, but definitely something to kind of consider in my personal opinion. So that's going to be the overall outlook for BTC. Not a whole lot of discussion because of the contraction and volatility. So what we're going to look at now, usually we do this for just Performante Premium individuals, but I know that there are Performante Premium individuals already watching, so we're just going to go straight through. We're going to separate the videos, but not really a problem that we give some information out in the cryptocurrency market. All right, so just a quick discussion on what we've been seeing with the pairs that we've already been following. Quickly looking at VeChain, we were discussing this previous symmetrical triangle. You could also look at it as a ascending triangle as well. So let's take a picture right here. We saw a series of lower highs and especially higher lows create a squeeze within the price action, and the price action was consolidating, broke to the downside. That was our indication that we should kind of step back, not really look at it too much, because in this type of structure, you're not looking for shorts, in my personal opinion, especially when the altcoin market is doing really well. You know, you could be looking for shorts, I guess, but it just does not make sense in my personal view. You want to be looking to continue the momentum and continue the overall direction of the market. It doesn't make sense to look for an opportunity to scalp from here to here if there's a lot more momentum going to the upside. So that's what we're going to be looking for. We're only going to be looking for longs as of right now. And the fact that we broke below this squeeze definitely gives me an indication that we could be waiting for a little bit longer, right? So we got our first validation, second, third, fourth, fifth. So this is going to be the major level of resistance that we want to see break. We could see a nice descending zone. We could see something like this where we're just holding a horizontal zone and then slowly squeezing in through this descending zone, creating a potential descending triangle. But whatever the case may be, we're not really looking for an opportunity unless we start to break this major level of resistance. If it does break this resistance, if it fails, kind of goes like this, and then contracts, boom, and then it starts going like that, that could be a good opportunity right around here. But we want to see this zone. We want to see a point where we're seeing higher lows squeeze the price and make a higher high and a higher low. That would be the best situation that we want to find ourselves for VeChain. So a little bit of a wait time for VeChain because of the fact that we broke below the zone, and we're not really looking for continuation patterns by hopefully waiting for a bounce. We want to see validation. We want to look for the highest dependable trades that we can see or that we can find. So VeChain is right now a asset that we're just patiently waiting for a better opportunity to enter. Cardano is very similar. We did see this nice symmetrical triangle. It would have been really, really nice to see a continuation because this was actually a very well-respected pattern. We see our anchor point right here, 2, 3, 4. This is a key level of resistance, and we see 1, 2, 3. This is a key level of support. It would have been nice to see something like that, where you see previous level of resistance turn support after breaking the symmetrical triangle to the upside. We didn't see that. We're just breaking to the downside, so I'm just going to take away this chart. We could see a potential descending zone. I'm just going to draw in a horizontal zone to see if we're going to hit something somewhere maybe around here. So that would create a nice descending triangle formation, which wouldn't be a bad place to look for opportunity. But right now, we don't see a whole lot of opportunity in Cardano. We really want to see a continuation pattern before we look to really gain any exposure to these alts. So they had a really good run, and look how long this took, right? It's not going to be instant. Look how long this took, right? June till almost the end of June for this structure to form, right? This long structure. And right now we've only been in this structure from June 6th to around June 20th. So it could take a little bit longer. Like we saw here, we did have a nice ascending zone like that. So you could say that would have been a good opportunity. Kind of like so. Not going to be drawing it perfect, so I'm just trying to give you an example. But you see these nice ascending zone that broke to the downside, and then you held a support for right around here, which kind of looks like the support that we're holding right now. And then you get this nice descending zone where you could look for opportunities to enter long. You could go here, and that could be your entry point, whereas that's a really, really solid entry point to look at. Previous low, you could go there, you can go kind of there, and you'd be looking for the size of that zone. I don't know exactly how you're going to do it, but whatever the case may be, and then if you unfortunately got taken out, that's another opportunity where you'd be looking for break and retests of that zone. Whatever the case may be, I don't exactly know what structure and system that you use, but you're looking for continuation patterns, right? That is the name of the game. So we don't see anything as of right now. I'm just going to leave that on actually, but I will leave Cardano just sitting there because I don't really see an opportunity to be looking at possible entries just yet. All right, next two things we're going to be looking at is Tezos and Chainlink. So let's first look at Tezos here. It would have been nice to see a break and validation of that zone, but we didn't really see that too much, where we saw this horizontal zone hold multiple times, this one right around here. So we didn't see that break and retest. We did draw this zone right around here. So we saw this previous descending level of resistance did actually break above the zone, but this is why we always look for structural breaks, right? Not just the actual price action pattern breaking. So this could be considered a symmetrical triangle just by going like this. So you're not just looking for the descending zone to break. That's not what I'm looking for. Let's just draw in a snip. You're not just looking for this descending zone to break here, but you're also looking for this resistance, this horizontal level of structure to break. That's why we look for both break in the price action pattern and the structure, right? Previous high, new level of support. That's what we look for in our trades. We didn't get that, so that would not have been an entry confirmation, and then broke back below the support. So now this looks a lot less ideal for a long opportunity where we see failure and then we see some weakness now within the chart. So XCC does not look all that great. Link did have a formation of a symmetrical triangle, like we can see very clearly. Broke to the downside, consolidated within this ascending triangle pattern. You could just call it an ascending channel as well, but you got a series of higher lows, break, retest, and then now you're getting a sell-off. So Link does not look as great. Let's go back to the daily chart because we know that $5 range is a very, very significant zone that the price broke out of around here. I would definitely say waiting for more of a continuation pattern would be a good idea at this point. You could be looking for something like this, something like this, something like this. Whatever the case may be, you'd be looking for structural continuation pattern right now. We're moving to the downside after a massive impulse push. So it makes sense that we're going to get some level of a continuation pattern. We can see that right here. Massive push, and then you get your continuation pattern to continue the push. You can draw it like this, and you can draw it like this. Whatever you're looking for continuation. You got that massive move, pullback. We can see that right here. Also a continuation where you see a massive push to the upside, and then you see this channel kind of right around here. You could draw it into a descending triangle like here as well if you really wanted to, sort of like that. But you're looking for continuation, and this is still really early in the process. I would rather wait to see something that holds a structural zone like a triangle, wedge, channel, something along the lines of that. On the 6 hour, it is somewhat forming. So if you go like this, you go like that. So you could say it is forming some structural zone, but it's definitely looking like we need to have a little bit more time before we actually start to gain back our buy pressure. So we do see a little bit of a support at around $7.20, but the main zone that we want to see is to get a validation of this descending zone, very, very well respected. And then when we see a break and an injection of buy pressure and a wave of buyers coming into the market, that would be an opportunity that we'd be looking for. So Chainlink is still an opportunity. I would say that we really need to wait and be patient with the altcoin market right now, just because of the fact that a lot of these coins that were doing well before are consolidating, are taking a breath, and are not really seeing a ton of buy volume just yet. Stellar unfortunately broke to the downside. I thought that was a really good opportunity, so let's just take it up right here. Did not enter this because I was going for the weekend. Let's try to get this. Sorry, people who are on TikTok, give me one moment. I have many alarms that I have to get off. So basically, going back to what we were talking about, Stellar was a good opportunity, my personal belief. Why was it so? We could draw it in a little bit more aggressive way, but we did see a descending zone squeezing the price towards a horizontal level of support, which we saw right here. And we did not see any break. So theoretically, the entry should have not been there, but if you're looking for more of an aggressive break, you could argue that this break and retest was valid, and then you'd be looking for this zone to break and hold right here because it was a previous level of resistance and it turned to a new level of support. So if we're going like this, making that red, and going to the possible 2-hour chart, we see this nice squeeze, and then you see the price hold, break, retest this previous resistance as a new level of support. So in terms of that zone, you could argue that that would be a retest and a break. But you know, if you are using a little bit larger of a time frame, that would be the main level that I'd like to see break. But like I said, I did not take this entry because I was going away for the weekend, and I did not want to have a position over the weekend that I needed to manage because it was a weekend where I didn't want to be looking at charts, basically. So broke below on the 4-hour, so it's looking a lot less bullish for Stellar. So definitely, I think waiting, being patient for the altcoin market to reemerge would be not a bad situation. All right, let's take a quick look at the 2-hour chart here. Not a lot is moving to the upside. We see stuff like ALGO that was doing really well. ALGO, USDT, not on Awanda, but on all exchanges. So let's look at ALGO that was doing really well since around, let's say, you know, July 1st. Around there, it's just been on a massive move to the upside. We can see structurally a little bit difficult to get an entry with these massive pushes to the upside. I know they are creating nice, you could call it the high base, previous resistance, new level of support right around there. So that's a pretty great overall structure. And then you see another structure where it's holding a strong level of support right around here, as well as a key level of resistance. So in terms of structure, it is holding pretty well, but you know, within this move right here, how are you going to catch that? You got to be entered before. And it's not creating a nice squeeze. Like that would be an opportunity that you could be entering before. So if we go to the 1-hour chart, we see a nice squeeze. That would be the entry for ALGO. I did not take this entry, but there is, you could be looking for, let's get a rectangle, break and retest of this zone right around there. So that would have been your entry if you are using the structure. So stop entry above the retest candle right around here. Stop loss below the previous low. Take profit first would be the arrow from the high to the low from the breakout zone right around, let's say, maybe at 2, because that would be the minimum. So maybe somewhere around there. I don't really like taking anything under 2 risk reward. Actually, that's not really at the breakout zone. Right around there. You can also draw in a symmetrical triangle, which it does look like it held, which is going to give you a little bit larger of a take profit potentially. So let's delete this one and then go like this. The actual true zone was around here. So let's see if that, and let's extend this just out. Someone's calling me, which, sorry people who are on TikTok. There we go. That is what we're looking for. Not going to take it. Sorry for whoever called me. So that would be the zone that I'd be looking for if it was before. So I'd look back, size of the triangle, and then we see that would be the next possible zone that we'd be looking for. So 2.4, 2.3 or sword, not absolutely phenomenal, but pretty decent. Move to the upside, and now we're holding this very, very well-respected support right around here. Another major level right around here. So it's a really large consolidation, but you could also put a middle zone. So might not want to put that in the large triangle, so I might just make it in white and just put a little dotted line there. Not really seeing any squeeze. Like, it'd be nice if we saw a descending zone possibly hold there. Not loving it, to be completely honest. Let's get our projection, because there's only really two touch points, right? The first touch and second touch, so there's not a whole lot of validation in that area. So let's get our projection here. Come on, there we go, right around there. So if it does hold, that could be an option, but not really looking at this for an entry right here. I'd want to see this kind of get to the high and then maybe create some level of an ascending zone, and then if we're able to get an ascending zone and then a break, retest, and that would be the opportunity that I'd be looking for. So definitely we got some time for ALGO. Not a lot else is moving up here. We see another one, OMG, that did all right. So let's look at OMG. And nope, that's not the one we're looking for. This is the one, OMG USDT. Yeah, really hard to trade this. It's very, very noisy, very spiky. Wow. Let's go to the 15 here. Yeah, I don't know if I'd trade this. The moves aren't very fluid. They're not waves. It just absolutely explodes. Don't love the smaller term price action, but you do see it's holding a nice level of previous resistance right around here. So let's go to the daily. Yeah, it's kind of basing, but I don't absolutely love it. This is the major zone that we need to see break, and then we see a nice rounded bottom. So we could see another bit of a lower high. And I would want to enter with a continuation pattern above the 1.8, somewhere around there, because we have a nice rounding bottom, but we see that there's a major level of resistance at around $1.73, $1.74. So we were able to get a nice higher low, and then around this zone, you'd be looking for descending wedges, descending triangles, like that, squeezing, 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 expansion, already broken the resistance. That's the type of structure that we're looking for. So I wouldn't say that this is the best opportunity, even just looking on the daily chart. All right, not really else much on the altcoin market. If you have any questions, just drop them in the comments section below. But I currently do not really see any alts that are absolutely phenomenal right now. We're actually taking a little bit of a breath, which is needed. You can't have an asset class just go up forever without any sort of consolidation, correction, or market breath. Remember, the market moves in waves. So right now, it's a consolidation. So we're going to be looking for opportunities, but it's a bit of a calm time in the altcoin market. So regather your, thoughts. Look back at previous trades. Look what you did right, what you did wrong, how you can improve, how you can maximize profits, how you can reduce risk, and set up your system in a way that is able to maximize each trade you take in an ideal situation. So thank you very much for watching. Really appreciate it. If you have any questions, like I said, drop them in the comments. And until next time, have a good one, traders.